And we now present to you our next Bravo Dialogue, Investing in the Latin America of Tomorrow. Please welcome to the stage the moderator for our next panel, Susan Segal, President and CEO of the Americas Society, Council of the Americas, and 2024 Bravo Investor of the Year, Francisco Alvarez-Demalde, co-founder and managing partner at Riverwood Capital.
Microphone, everybody. Now it's working? Okay. So, good morning, everybody, and I hope you're enjoying the program. This morning, I have really a great privilege to be sitting here with an old friend, and I would say one of the best investors, not just in Latin America, but globally. Francisco has been a very early investor in technology, and frankly, he has seen the impact that creating new and exciting companies can happen, what can happen when you create new and exciting companies. In my opinion, entrepreneurship and new and small companies has really changed Latin America over the last 30 years. The emergence of entrepreneurs, the energy, the new companies, the ecosystems, the innovation, which is driving social development and a really positive can-do attitude. And Francisco, as I said earlier, has been at the forefront of this with some of the most successful companies in Latin America. So with that, let's just start. As you know, Francisco Alvarez-Demalde is the co-founder and managing partner of Riverwood Capital, one of the leading investment firms solely dedicated to technology growth scalability. And as I said, not just in Latin America, but around the world. Tonight, he will be receiving the Bravo Investor of the Year award. So thank you, Francisco, for being with us. Let's start. How do you see the investment environment in your space today, and has it changed over time?
Yeah, well, thank you. Thanks for being here, and thank you to you, Susan, to the Council of Americas, and to all the organizations that are supporting not only this initiative, but all the connectivity across Latin America between the private sector, the public sector. I think it makes a big difference. It brings leaders together for us to try to not only follow our journey, but collaborate into hopefully creating more opportunity for more people. So I'm very excited to be here. I'm very grateful. In terms of what we're seeing or what I'm seeing, I spend my time, of course, in technology, and that's kind of what I spend every day, every hour. So sometimes I, missed some of the other things that are going on. But I can tell you from my own universe or my own dimension, I think we are in this moment of, I call it, I've been talking to my team about this year. I think we're in a little bit of entering a new chapter. I always like thinking in chapters. Life has chapters, companies have chapters. I think cycles also have chapters. And I think we came from a period when you think about capital flows to technology. We came from a period of significant growth, driven by excitement on opportunity, but also interest rates, mainly in the US and globally, going down. That created a push of liquidity into more innovation, into more investment. That peaked in 2021, and then we entered a period of correction with interest rates going up because of inflation, and that contracted a little bit that capital. And I think we're in this 24, which is almost like I'm feeling that is a transition into a new chapter from a capital flow perspective into probably some back into more excitement when I think about today and 2025, if I compare to 23 and 22. So that's on the money, on the capital flows. But then to me, the biggest story when I think about tech is not so much where the money goes, even though money is always important, is kind of what's happening with transformation in the economies and the opportunity for company creation. When I think about those technology trends, I think we're in a constant transformation and even probably an acceleration of incremental waves of innovation. So when you take a step back and you look at the region, you look at Latin America, someone earlier today was talking about 650 million people and all the opportunity on digital inclusion. Think about a little bit, and some of you will have the perspective probably I have, some of you probably a bigger perspective than me. Susan, you were a very early investor and supporter of the ecosystem of tech in the late 90s. And you think about where we are. I mean, we went from being a region that was disconnected to getting internet connectivity. Then we got not only internet connectivity, but we got the phones, and we got computers and the smartphones in our hands, and then we got digitalized into retail, into fintech, etc. That created infrastructure not only on connectivity, but also on digital adoption. Think about the next generation, how connected they are. I would say that a young person in the middle of Brazil is probably more connected than a young person in the middle of Arkansas. And that connectivity is creating an opportunity for more and more layers of innovation and foundation. And that innovation in the private sector is being leveraged by some of the corporates, some companies that are moving fast into adopting that, but a lot of it by new companies, new company creation. It can be a very sophisticated software company that is selling into all Latam, but it can also be a merchant that starts from zero and then sells in Mercado Libre and does something new. So to me, when I look at the technology evolution, I think that we're almost just starting. I'm an optimist by nature. It's kind of what I have to be also in my sector, but I truly am very optimistic because I think for Latam, as long as we facilitate the free markets, the private enterprise, I think we're going to continue to see more and more company creation, more and more activity driven by technology. And if we talk about what's coming next in terms of automation and AI, I think it's more and more tools for people to be able to sell and play their role in the economy.
So you are really a part of the ecosystem of entrepreneurs and investing, both in terms of your own investments, but also the Latin Tech Forum, which is the leading forum for technology for Latin America. So what are the key characteristics you look for in an entrepreneur, and have they changed?
Yeah, look, it's first of all, I feel proud to be part of a community that is getting bigger and bigger over time, which is a community really of, even though we sometimes compete among each other, we compete maybe sometimes among our companies and between founders, but at the end, in my experience, having been part of this community of technology and entrepreneurship in Latam, when I look back 18 years, I look at today, it's a community of well-intended, it's a community with good values, and at the end, it promotes collaboration where we're all thinking about how do we increase the pie, how do we make it bigger, versus trying to fight for that. So I think that's one characteristic. I know it sounds self-marketing on the community, but I truly believe in that. And LTF is something that I feel very passionate about. We started 15 years ago, and we're bringing together the top CEOs, founders into one place for them to collaborate even more. And I can see it. Every time I'm there, I look at maybe two competitors having a conversation and laughing, and then others doing a partnership. Technology is very much like that. It's a new wave, really, of thinking about how to build. It's not about you versus me, or I need to go and talk to the regulator. It's totally different. It's about creating value for the consumer and the client, and that drives a pretty interesting dynamic, which we cooperate as well as we compete. And LTF has been also one of the contributors, in my opinion, like a small contribution to this development, as you say. I think in terms of what we look on a founder, look, it's tough to define that. I think we'll have the opportunity to talk to Sebastian and to Mariano, who I admire. I think they are amazing. You guys will hear from the Martin Migoya and Martin Umaran from Globan that are amazing entrepreneurs as well. I think every person is different, like in any other aspect of life. What I would say when I look at an entrepreneurial team, if I look at companies that can really make a difference and can have an impact and can create something new, I would say that I always use the same combination. I think they need to have two things, which to me are pretty relevant. One is they need to have a dream that looks a little bit crazy. People are using now this concept that, there's a thin line between craziness and being a genius. And I think you need to just dream. You need to just go for it. I sent some phrases. I'm looking at Caitlin that we work together. Last Friday, I sent in our internal communication. I sent some phrases. I was like using slogans now, but I sent like 7 or 6 phrases from big visionaries of when they talk about dreaming and never say no, never think that anything is possible. I know that sounds like a blah, 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 but in these companies it's real. If you're not, I tell that to my kids, if you don't believe in you and you don't believe you can achieve it, nobody else will believe it for you. So you have to be the first believer that you can do something different and you can do it new. The second component is combine that dream with what I would say is a crazy intensity and execution. There's no magic. Things don't happen for magic. There's no something that happens by luck. When I look at all these companies, there is not only in the leadership, but then it translates into every aspect of the company. Every day, it's day one. We have to win. We have to do things right. We have to get better. We have to constantly elevate. So there is a passion to constantly, and it's not about that single result of that month. It's about this mindset of, having something, we're fighting for something that is bigger than yourself. And it's not about the money. It's not about the ego. Sometimes it is about those two things, and they can be part of the mix. But it's about just believing in something at a level that you really aspire for good quality. Because it's tough. It's tough to build leadership. It's tough to build constant. It's tough to do it for a long time. So I think I see those two components.
And you need passion.
Yeah, and it's part of the second part. You need that passion, that spirit.
So before our other panelists come on the stage, I want to ask you one question, because everybody's talking about exits. And I think that since interest rates started to rise and we got into a tougher environment, exits have been fewer and far between. So could you give us your perspective?
Yes. And look, my view on this thing, on the exits and capital flows to Latin America, I'm always a little bit in the middle, in my opinion. And maybe I'm wrong, but it's the way I approach things. I think it's not as bad as it might sound, but it's not as good as it can be. And we navigate in the middle. And I think sometimes you have moments where there is exuberance. Sometimes there's moments where it's tough. It's tough out there because, there's prioritization of capital, and maybe Latin America is not a core region when people think about the big asset allocators. So in a way, I always say sometimes to my own LPs, and I explain Latin America, which is part of our portfolio, I say the Latin American markets are more thinner markets. It doesn't mean that they're always cheaper, they're just thinner. So when things get really hot, there's probably more capital than opportunity. And when things got bad, there's much less capital than opportunity. It's kind of like the economy's cover, right, of Brazil being the best country in the world, and then the worst, and probably the answer is in the middle. So that's kind of what happens when I look back 15 years. We're now in a moment where 22, 23 was a year of adjustment, less exits, less opportunity. But I'm optimistic that things are going to recover because at the end of the day, in my opinion, and I think when I think about the future of LATAM, in my opinion, I think the key is entrepreneurship, education, human talent. Of course, we need the infrastructure of connectivity, but the information age technology is easier. We don't need big infrastructure, highways and things like that, or to build a pipeline because it's there. So we just need to put the right components so talent can surface. And when talent is there and opportunity is there, at the end, the capital ends up reaching the opportunity.
I completely agree.
The capital is there if you have a good idea, if you have a good company. So all this to say that we're now living through a period of correction. I think things are getting more exciting. I think 25 will be better than 24 in availability of capital for LATAM. But if I take a step back a little bit of the last 4 years and I look at the last 20, we're in a much better place. Think about what's the largest market cap company in Latin America today.
Mercado Libre.
Exactly. And 20 years ago, it was, probably an energy company.
Pemex.
Exactly.
Which is a disaster today.
Okay. Well, I didn't say that. But.
I did. But so our exits, we have to call the other people on stage, but are exits today more aimed at acquisitions than taking companies public? And is that going to swing back?
I think IPOs will come back. They're cyclical. Mercado Libre, we had the amazing opportunity of doing Global, VTEX, and others. They've been shut down in the last few years, but I think they will come back globally, not just for LATAM. But it's more volatile. Strategics, there is interest. We have done exits to US strategics, Europeans, Asians. So there is interest in LATAM because it's a huge region. Also, we have a geopolitical advantage, which I think is pretty interesting when you think about decisions on capital allocation. And then I think the third one that probably will have, I'm optimistic that it will develop more, is private equity penetration. Private equity had its waves in LATAM, but never consolidated strongly in tech. I think it's a combination of lack of attention from global, lack of knowledge from locals, but I see that changing. So I think in tech, in my sector, I expect a little bit more activity on big private equity deals in technology.
Thank you. That's a really interesting perspective. Can I now invite Sebastian Mejia, co-founder and president of Rappi, and Mariano Gomide, CEO of VTEX. I point out that VTEX is a company of Riverwood. Rappi is a company of many other private equity funds. So let's join. Both companies are immensely successful. So you both have been incredibly successful. You have built billion-dollar companies from scratch. What's the secret sauce of your success? Sebastian, you want to start?
Imagine a bunch of 20-year-olds in late 2015 dreaming super big and trying to create a company that hadn't been built and trying to create something of pretty large scale. So if you go to that group of people, I think you start with the culture. And you start with a culture of love for entrepreneurship, love for a big mission, love for a big dream. That's incredibly important. That's the only way to create a really long. I think if you go also to the foundations, you gotta go to a company that has a profound customer obsession, and it cannot be a slogan on a wall. It needs something that you live every day. In our case, we're delivering groceries, we're delivering food, pretty complex business, and we're delivering in minutes. So you gotta really have that profound obsession for the customer. I think you need to start really with first principles on how to build product and engineering. It's incredibly important. These businesses are built on operations, but at its core, these are technology companies. Being able to bring the best talent, being able to bring profound solutions is incredibly important for the long-term scaling of the company. And I think those are all really important stuff, but they are, let's say, necessary conditions, but they're not sufficient. I think you need to have an incredibly sound business model, a business model that has capital efficiency at its core. You need to have a business model that is based on really high retention of your customers, people that keep on coming back. You need to have founders that are obsessive self-learners and that are reinventing themselves every month and growing at a velocity that it's pretty intense. So, and keep on dreaming big. And the only way to keep on dreaming big is to build businesses that are very authentic to yourself and businesses that are connected to a mission that you really believe in, that is very personal. So it's a pretty big combination of things and requires also a fair share of luck. But I think those are like at least basic conditions that you need to have to build something great.
Thank you. Mariano, what's your secret sauce, besides Francisco?
So fully agree with everything that he said. I would add only one thing more is look at Latin America as a leverage to arbitrate the world. It's not only a region by itself as a final destination, but it's a leverage to you and the investments that you're going to deploy to leverage the world. The creative engineering of Latin America, it is probably today the most efficient engineering source of talents to the world. For sure, it's the more secure in terms of nearshoring to the US, and in terms of efficiency, it's probably top one. So how to build a $1 billion company is arbitrage. It's how you build richness in the world for centuries, is getting a asset that's cheap in one place and arbitrate the price for another place. That's how we are making money for centuries. And now is the time that that asset, that's 270,000 engineers a year formed by Latin American universities, can be arbitrated to the world. We do have tomorrow or today at night the Martin receiving the award of Globant. And what is Globant? Amazing company that represents the arbitrage of the creative engineering of Latin America. So I foresee many, many other billion-dollar companies coming from Latin, but guess what? Not addressing the Latin American market. Global companies forged and emerging from Latin America will be seen in NASDAQ, in New York Stock Exchange, and we are happy that VTEX is opened the door for many others to come.
So following up on that, how do you keep your company growing? How do you keep your team focused on taking the company that maybe starts by being worth $1 billion, but you want it to be worth $10 billion? How do you keep the focus on that and your team focused on that?
Easy, right? No?
Money, right?
Now, so to grow 20, 30, 40%, and to make it in a profitable way, 10, 20, actually you need a lot of grit. You need to sell an idea to the entire team that is something much greater than the results that you are providing. Some companies call this purpose, can be, but at the end of the day is the daily job of the founder and the CEO to shape this culture of topless mountain, right? Because you're gonna achieve greatness, but it is in greatness that you're gonna fail. So what means great? So we set the bar in VTEX in a very high level because we enjoyed the journey and tough journey. We are competing against SAP, Salesforce, Adobe, Oracle, giants in the world, and we're thriving. People are noticing VTEX all over the world. We are top one in IDC. We are receiving the honor of serving multinational companies all in 30, 36, 38 countries. So how you can build that from Latin America? You just need to repeat that Latin America can be serving the world. And that on a consistent way during years and years and years, and we are doing this for 24 years. VTEX is not like a 5 years old company, it's a 24 years old company. So you just need to repeat the ultimate goal. That's a simple answer to keep the focus on the table.
So Sebastian, yours is some way much more retail oriented. How do you keep, growing the company and making it bigger and bigger and bigger? What's your aspiration?
There's just so many more problems to be solved, and if we look at our focus, we're still serving a fraction of our addressable population. We're still being a small share of all of the volumes of whatever categories that we look at. If it's food, if it's groceries, if it's pharmacy, it's still very, very early. So that's one clear dynamic. I mean, we all know the size of Latin America on every metric. I think also you need to keep a very, very high bar constantly around excellence, and it's hard because you never get there. So you keep on raising it, and you raise it for yourself, and you raise it for the team, and it becomes hard, and some people get there, some people don't. But that's the really the only way. I think third, you need to have a real profound understanding of your business model. And in our case, like the way I frame it is scale effects shared. So you need to be very big on one core business, and then you use all of those resources to keep on giving value to your customers in a form of a loyalty program, for example. And that gives you the right to go into other categories or other verticals or other experiments. So think of that as almost S-curves that keep on coming and coming and coming. So you need to have a very extended roadmap that excites people. And just lastly, living the mission, and we're driving progress in the region. We see it in our customers, in our couriers, in our merchants, in our restaurants. So that's very real. This is not like, again, something that is up there. You see it every day when you're building Rappi. So that's also important fuel.
So Francisco, as an investor, you've seen value come and go in Latin America, but also in investments around the world, in the United States, et cetera. What do you think is the most important thing to keep value in a company and keep moving forward so that the company just continues to grow and the management team continues to be incentive? And I would say as an investor, but you're on the board of so many of the companies that you've invested in. So how do you keep driving?
Yeah, look, I think it's a lot of what Mariano and Sebastian have mentioned. And not to be a populist, but I just want to acknowledge for 1 second what both of them have achieved, which is incredible. And Sebastian company, Rappi, touching almost all of us in Latin America. And not only that, creating a wave of new entrepreneurs. They now call it the Rappi Mafia or whatever that is.
Rappi Mafia sounds better.
Rappi Mafia sounds better, right?
With a G. Yeah.
But it's like the next, it's kind of what PayPal created in Silicon Valley. The next wave of entrepreneurship. Mariano, the first software company from LATAM going global, competing with the majors, showing that Latin America can be a source of amazing leadership in tech. And I cannot stress enough, and now I sound self-marketing here for the industry, but I don't think people understand the impact that this has in Latin America. I mean, energy is great, agriculture is great. It's great. We can build roads, we can have a traditional economy, it's great. But having this ability to provide this opportunity has such a big social impact into what talent can do, the people that work in these companies, the future for these people, that they can stay or they can leave. So it's just huge, and these two are historic, I think, for LATAM, in my opinion. Then now, going back to your question, and not to repeat what they said, what I would add to what just they describe is, I think that at the end, results really come. When I look at my own journey, the companies I had the great opportunity to be part of, results really come as a consequence of the vision, of the hard work, of the purpose, of the commitment, of trying to do something amazing and trying to really add value. And at the end, the results come. If you are focused on the long term, results come. It's what I was telling founders in 21, where there was a lot of, we were living through that moment of more capital than opportunity. Now there's probably less capital than opportunity, but then capital is a driver of things, because if you give me the money, I will spend it. So, and I think I was telling people, look, don't think that raising money is anything. It doesn't mean anything. Like, it's okay, you have money. It means that you have the power to do more, but think about what you're doing, because you're writing a book. Every day you're doing something, you're writing a book of your story as a company, and then people learn. Of course, you can change, you can make turns, but everything stays with you. So I think if you're doing the right thing, then to me, capital is an accelerator. That's kind of our job. We try to help with our capital that we allocate, and sometimes with some of our help to accelerate the journey. But the journey has to be, it's not about raising money, it's about what are we doing, what are we solving from the client, are we doing something different, are we doing something better? And that's why I'm so optimistic, because I think there's so much more to do for the next 15 years that I think we're going to see more and more coming from the region.
I couldn't agree more. I've worked with Latin America for over 40 years, and I think that entrepreneurship and the creation of these new, young, vibrant companies has been the greatest thing and the most impactful. I've seen the most change in Latin America from this perspective. Otherwise, nothing would change, right? It would all be the same. So now I'm going to ask a framing question. I remember when I was a venture capitalist, everybody said, we want value-added investors. We're going to choose our investor who can add the most value. So how do you choose your investor? Is that true, Mariano?
We have a very few experiences with investors.
I might murder you if you say the wrong thing.
You can be honest, Maria. You can be honest.
We have a very few experiences in our 24 years with investors. We actually did practically like 2 rounds before IPO in 24 years. We bootstrapped the company because it's interesting, right? People just don't know, but VTEX is a public company, but we still own 48% of the company. So how you reach that level, you need to pursue to control your own future. With that, you can choose your partners. We don't choose investors, we choose partners. And when we chose the first one, was 2011, was Naspers. And then Naspers in 2014 sold their shares to Riverwood. And that moment, we could choose because it was a big moment for Latam. We have plenty of investors. And we had a kind of a veto. And then we saw like 10 of them. And then I met Francisco. And then we immediately chose Francisco. And guess what? It was not the best valuation.
Why did you choose Francisco?
Because of the long run. You don't choose to arbitrate exits. That's not how you create value. So I didn't have any intention of selling my company. I have intention of growing my company. And we want to choose someone that you can have a drink for 20 years. We need to choose someone that you can have a drink with their family. That's how partnership becomes a great venture. And I felt that. And I say, wow, I can have a drink with this guy. And we still do. So that has been 10 years now that we are together. Francisco bought first stake in the company in 2014. And it's for me, it's an honor to share with him. We are friends. And I believe he is a friend of all majority of his investors. So when LPs of Riverwood call me and say, could you tell me more about Francisco? And I ask, which one? The friend, the investor, the mentor? I have many of them to tell about it. So, yeah.
So, Francisco, do you like having a drink with him?
I love spending time with Mariano. And I love his yacht. He bought an amazing yacht. Sorry that I say this publicly.
I have a preparatory call on the yacht.
You should all get an invitation.
I was in Connecticut. He was on the yacht. So, Sebastian, how did you choose?
I think our story is quite different because we did build a company with external capital, and Rappi is a capital-intensive business, so we thought it was important that we were able to bring capital to build what we wanted to build in over a prolonged period of time. So I do have a lot of experience on working with all sorts of investors. And I kind of boil it down to one thing, which is, are there principals or are there agents? And what that means is, and I talked with Francisco, and it's like, do you have your money in the fund? I want to know that because the behaviors that happen because of that principality are completely different than if you're just an agent. If you're just an agent, you're pursuing other outcomes, you're short-term, maybe you want to be promoted, maybe you want to look good in front of your boss, maybe you want a good look in the eyes of the industry, who knows? But it's not a real commitment with the long-term on the company, and you're not sitting next to each other as, look, we have, because founders are putting 100% of assets. It's one of the most concentrated bets that you do. It's your time, it's your life, it's your energy, it's blood, sweat, and tears, and it's not like I have a lot of options. You don't. So I like to have partners or investors that actually have commitment and real skin in the game, because it makes it all much, much easier. And then you go into possibilities of, can we build together? Can we solve this together? That's where the real value add comes from. It doesn't come from a slogan in their pitch trying to convince a founder that I'm going to help you with this. Not really. It only comes if there's that principality and you can build that trust with the founder, and if you can get into the mind of the founder and say, okay, I have a real trusting relationship with them, then I'm going to open you up. What are my fears, my challenges, my problems? Let's fix it together. And then the good investors also know when to help, when to completely stand back and not bother the company. But I like to start with that, and I think my best investors are principals, and I can have, like, if I look backwards, I have very good sample and a very good evidence, and the ones that were not great are very agent.
And are most of your investors still invested in the company?
Yes, they are. We've been 9 years in the journey.
Do you agree, Francisco, with the assessment?
And sorry, just greatness takes time, right? Like, was it Buffett that said that you cannot make a baby in a month with 9 women, something like that? Well, like, building companies takes a lot of time. Yeah. So it's 10 years is just when you're starting to see that compounding happening. So it's just the way it is.
Yeah, look, I think, I mean, the investment world, in particular for companies that are either startups or are mid-sized and private, you know, once you become public, it's different. You kind of lose a little bit control, and then you become more like a thing. And then people can buy and sell you every day, and you don't know who is buying you and selling you. You know, I went through the journey several times. With Mariano, we're going together. Now you're a public company, and anybody can buy Mariano's stock. So it changes. But then when you are in this journey of a private company, and then I think I believe, but of course I'm biased because it's kind of my sector, but I do think that partnership matters. Sometimes if you're only looking for money and you have a very well-defined dynamic and you have the certain, you know, there's situations where, you know, it's just money. But in most cases, I think when I talk to founders about this authentically, objectively, sometimes I get the call that I'm not part of the dynamic, so I just give my advice. I always tell them, it's like, first I ask, you know, what do you want? What are you looking for? You know, usually it's capital, but also it's, you know, what else? And then I go back a lot to what Sebas was saying and Mariano was saying. I do think that if you're gonna be with someone and someone is gonna buy a big stake in your company, you're gonna be sitting down in the board every day. That journey will be long, most likely. And then you're gonna put your future, part of your life, you know, you're losing a little bit of control to that partner. So you better choose the right partner. And, you know, what are the incentives of that partner? You know, what's experience? What is gonna happen over the next 10 years? You know, is that person gonna be around? What is it that they want? Are they aligned with you or not? What's their economics? It's just common sense. And I think, you know, in my case, I of course try to explain all that to founders when I pitch in my own offering. But I think all that matters a lot, because at the end you're in a journey that is long. And as I always say, you know, and I love someone that I've been hearing now from tennis players, that it's like, you know, the best tennis players in history, they only win, like, you know, I don't know, 50, 60% of the points. So you lose 40% of the time. So you gotta be ready to lose 40% of the time.
Absolutely. So Sebastian, on your journey, has your vision of what you want your company to look like changed, or is it the same?
I think when we started, we knew we wanted to build something very big. We were never short dreamers. We were always quite crazy. And I remember even before starting Rappi, I had the opportunity in my previous company to do a lot of work in India. And I got to see how the whole population was being digitized through mobile. And I got to see that in 2012. That really influenced me, because then I said, well, there's 650 million people here. We have a similar opportunity. So we always had that. But there's just a beauty of being a founder, that you're so optimistic and you completely disregard how hard it's going to be. You don't even think about it. You just go for it, and then you minimize all of the challenges and how hard it's going to be, and You have to have that naivete, otherwise you wouldn't just go and build a company. And I think what's required to build greatness has changed because it's just so much harder, and the bar is just so high. There's only, I haven't looked at that stat recently, but last time I checked, a few months ago, there's 43 public companies in consumer technology that are worth more than $10 billion in the world. Maybe that's 45, 46 now, give or take. So I like to think about that because then you need to have a very good answer towards, do I have the right to be one of those? Greatness is rare and it's scarce. So that has always pushed my thinking, and we've done things different because of that. I'll give you an example. Rappi is one of the few companies in Latin America that is built with a very strong local entrepreneurial team that understands the region profoundly and are very entrepreneurial on the ground. But we're able to partner with some of the best builders in the world that we're building for the best companies in the world, and many of them are sitting here in the US. And we do meetings in English, we do planning in English. That's rare for a company in Latin America to go through, but it really allowed us to have that blend of entrepreneurialism with operational excellence that has gotten us closer towards more of that greatness. So all those things you kind of don't see it at the beginning. You learn them as you go, and as you see yourself, like, I'm falling behind against this really high bar. So that's been my personal journey.
So Mariano, how has managing your company changed being public?
Adding just to Sebastian's comments, I forged in all VTEXers, and I believe I could overreach to my ecosystem a sentence that became kind of a mantra inside the company, is we are more curious about the future than proud of our past. And that reminds us that what you should celebrate. By being paranoid about and curious, really curious about how you shape the future, you can actually control it. So the IPO, you do IPO for 3 reasons. Or you need primary, because you are cash kind of capital intensive thing. Or you need a secondary because you have someone that needs to leave. Or the third one, that you need to be in a level of the stamp of marketing that put you in the very small group of companies, that 2.4 thousand companies are listed in New York Stock Exchange. And that means a lot because that's a high stake. And we did that for that reason. We didn't need the money. The investors wanted, they didn't want it to leave. But we wanted to say, yes, it's possible. The same thing why we brought Barack Obama as a president to the VTEX Day in Brazil. When we announced him in the stage, people was completely skeptical, say, that's the US president here in a corporate event. We normal tend to do these kind of things to stamp that the possibility of the unknown. So to be a public company, it's pretty easy if you plan accordingly. So I was preparing the company 3 years, 4 years ahead to be public. So we were doing kind of earnings calls, simulation, 3 years before IPO. And my executives, they ask, say, are you crazy? You are not even thinking about. And I say, that's the moment to train, when you're not thinking about. So now, where my mind is with all the AI thing, the rule of 40, that's going to be old. The AI will allow the world to pursue rule of 60 and 70s. And the rule of 40 for a company in 10 years' time is going to be nothing. The revenue per employee that today, if you have like $300,000, you are great. 400,000, you are awesome. In 10 years' time, people will be laughing about it. It's a 1 million, 2 million plus per employee. So how you gonna navigate these kind of transformative wave that is just popping? You need to put the company at risk. There's no other simple answer. And founder-led company will be the one striving in this very agile and sometimes dramatic environment. So I'm pretty enthusiastic of what can we do in the future as a public company. We are operating now in 43 countries. We operate corporate companies like Walmart, like Colgate Palmolive, like KitchenAid, like big ones, but still like the world to conquer. I truthfully believe we can deliver and curate the brand made in Latin America as an engineering force to the world. So that's how I see the future ahead.
Thank you. Francisco, you get the last word. So do you agree? I mean, do you see the vision of tomorrow with these two entrepreneurs?
100%. And I think it's not just for their companies, but I think it's for our region. I think if we can get together behind the idea that we have an amazing talent right there that wants to win, wants to have opportunity, and we, but not just us, everybody, we put the capital, the effort, the leadership, hopefully also not government interference, let's put it that way. I think we have a huge opportunity, and we'll continue to see more and more coming from Latin American tech.
I only want to add one thing, which is not just be the best in Latin America, but the best in the world.
I love
right?
that.
I love it, right?
Exactly.
Entrepreneurs, Latin American entrepreneurs leading the world. So with that, I want to thank all three of you for joining us today. It's been a wonderful conversation. I wish we could continue it because there's so much to talk about and so much to say. Congratulations again, Francisco, this evening. We look forward to being with you, and let's give everybody a real round of applause.
Ladies and gentlemen, please stay for our last conversation.
Thank you. That was fun.
Okay. Please welcome to the stage 2024 Bravo Company of the Decade honoree Martín Mejia, co-founder and CEO of Globant, along with Jorge Becerra, Emeritus Senior Partner and Senior Advisor at BCG, who will engage in a Bravo leadership conversation